Hello everyone, Jesse Webb, TradersPro. Market conditions, bullish in a bull market, still continuing with that overall uptrend towards the upper side of that range currently, which we've had that breakout on S&P 500. This is the chart right here of S&P 500 breakout. We're testing this upper resistance area, and we've had a pretty decent run right here. So we'll kind of see what, if we continue just to pause in these areas right here. Buy-sell ratio, though, we're starting to see some participation. Now we're getting some acceleration to the upside on buys, and we're also seeing back on the direction alerts page, our breadth indicator still kind of stuck in the middle, but starting to work that direction. It was another interesting set of data here on the indices tab. We've been talking about, we've had some of these others. We've had NASDAQ 100 leading, and we had the Dow leading, which we did see the Dow. We've seen, where did it go here? Industrials right here, 10. We're back up to 13 now. So we're seeing, some confirmation, a nice move in Boeing yesterday. Boeing had some issues, some news the other day. It gapped lower, and then there's just some confirmation buying right there. So interesting chart pattern on Boeing. And then we have just all of the other stocks that have continued to be in that overall uptrend. So we're seeing some strength in participation in the Dow, but look at all of these: Russell small cap, Russell 2000, mid cap. We're seeing a massive pop in that group of stocks. So that's a risk on type of trade where you're seeing people jumping into more aggressive, risky type stocks that have a higher probability of moving. And that's exactly what we want to see in bullish market conditions, because now we want to be focusing on some of these leading stocks. And they're going to show up in the muscle stocks group. Any size of company is going to show up in there. But if you really want to narrow that down and take a look at some of these other ones, there's going to be a larger list of names in there. But we're seeing pretty sharp spikes in S&P small caps and really across the board. You're seeing those buy-sell ratios up in the 2, 3s, and 4s, which means that you've just got, for example, this Russell 1000 index. You now have, 397 buys for every 83 sells. So almost 5 buys for every 1 sell. That's good, strong positive breadth that's taking place right here. Again, that being said, we're seeing a little bit of a pause. Let me show you the SPY chart, and you can just see this tight consolidation. This move right here took momentum clear up to this range, and now it's just settling back. This is what I like to see, and this is what I explain when we're dealing with an extreme trend, is ideally it'll pull back into that buy zone. And that pullback typically looks like this, where it's not doing much, it's not selling aggressively, it's not really sharp sell-offs, but that's just a consolidation phase after a big run-up. So this is constructive bullish price activity right here, which is a good thing. We're now obviously in this overall bullish uptrend. We're up in this extreme range. But again, just remember that doesn't mean that we're going to reverse and head back lower. Typically, it just means that trend is a little bit unsustainable. It's got to work its way back into that overall uptrend. So that's it's now at a location also that it could pop up a day or two. I wouldn't be surprised to see some continued kind of consolidation, sideways action for at least another few days, but we'll see what happens here going forward. The new buy list, let's take a look through some of those. We've seen medical and biomed really continue to move. Stock there, OI, decent pop. I don't like the chart. It's a pretty ugly chart. In fact, we've seen a lot of these. I've mentioned this before. If this is what your year last year felt like, same here, right? It's just been really choppy and crazy, and lots of false breakouts. We didn't get any continuation really throughout a lot of these this sideways pattern in the market right now. So that may be coming to an end, and so don't get shy and don't get skittish of chart patterns that maybe have had some whipsaw and some false signals there, because when they work, that's when you make all the money back. Okay, and these shorter term trades, we're stopping out, we're getting out, and those losses are going to be relatively small until we get an overall breakout moving on that chart. In fact, let's look at this on the back test for the last 6 months and see what that kind of pattern looks like in terms of still continuing to trade it. So in this case, we had 4 signals over the last year. Let's see, that's going back to a year and a half or so. And so you've got 4 signals. Actually, we had 7 signals, 2 winners, 2 losers. The overall net gain was 21%. 13% on winners and only 3.5% on losers. So you can see that even though those losers, even though we had a buy signal, would have been here. That was the new buy signal after a sell signal. So that back test is tracking only new buy signals after a sell signal. So it wouldn't show up as a new buy signal here because it's not. So this would have been, and so this would have also been. So the losses on those retracement patterns were pretty insignificant, 2, 3, 4, 5%. So that'll also kind of, the backtest tool gives you characteristics of the way that trend and the way this particular stock has been trending within our system. And so it's really effective to say, okay, I like this pattern, but let me look to see what some of this whipsaw activity has created for the stock, and that's a nice way to be able to do that. TAST, this has been a real big mover this year, and it's also, it's gone from 2 to 5, but this consolidation pattern now, again, I like to highlight this when we have it because this is the perfect setup. This is exactly the setup that we want to see. We want to see this trend, this momentum trend moving higher, okay, and that's moving higher from here. You can see this is yellow, so it's gone from yellow back up to green, and it's done it in a really tight consolidation area. You have those big run-ups, then you get tight consolidation, let that trend kind of pause, refresh itself, and then prepare for a new uptrend. That's one I would keep an eye on, just because it has the tendency and has the history of moving quickly. So that means you've got eyeballs on it, you've got traders and investors and firms that are interested in that type of trade. So keep an eye on that one. Let me refresh here because I moved my spot here. Whoops. Let's go here and here. IMVT, we talked about that one. MNSO, TAST, PI. Not sure on that one. A gap lower, probably on some earnings, and moving higher. That possibly could be a split. I'll have to double check on that one. IRDM. Also, just again, a lot of kind of ugly patterns, honestly, on a lot of these stocks right here, but these are fundamentally, this is a really good looking setup as well, because you have all green. You're early in the trend. You have all green on the fundamental side as well. So last quarter EPS up 900%. That's probably cost cutting because the sales were not quite as robust. So you're definitely seeing that where companies are growing their earnings by cost cutting in some of these current market conditions. Keep an eye on that list. A little bit deeper in the list, there's a few more patterns that might be a little bit better setup. Let's go through and see. Here's AMK, good solid confirmation bar here. That's a good place to be able to set one up and adjust your stop loss at the low of the bar. Pretty quick process to go through the entire list, or at least the top 15, 20 stocks that are showing up as possibilities today. That'll do it for our update this morning. Thanks very much and have a great day.